Welcome to the Money GPS. You came here for the truth, so let me unveil that for you. We look around today, things are down. But what's up? I'll show you all of that. We're going to take a look at the economy, the markets. I'll wrap that up as quick as I can. Let's begin by taking a look at the crazy housing market finally slowing down. There's a lot of stats right now that are showing that the markets simply cannot sustain the growth, and that's expected. But what is that primary factor? Of course, it's the central bank intervention. You pull away that stimulus, whether it's the quantitative easing, whether it's coming from the government side with all of the stimulus packages that they created, infrastructure packages, and sending out checks to people and so on. You pull that away, of course. When you look at what's happening with interest rates, that is understandably going to have an impact, okay? That's what this covers in here. It gives you the stats, but that's what I really wanted to say. The home buyer sentiment is declining rapidly, as well as, you see what people are doing generally with their spending. Things have really changed. Stimulus wears off, you see the results. Home prices are at record highs and are still rising, but there are some early indications that the market may be starting to cool. For sellers looking to get top dollar for their home, this is the time to sell. Okay, that's a real generalization, of course. And I do believe that for people who are going to stay in the market, let's say they are upgrading or they are downgrading, or this is something that they're doing for their own personal residence, that timing the market is always going to be something very difficult to do and generally shouldn't worry about it. For an investment property, totally different scenario. I've covered this in previous videos before. Let's look here. Americans right now are most worried about inflation, about all the other things, the politics, the violence, the government debt and this and that. No. Inflation is the number one thing. Okay? And that's, I've shown you before, that is just yet another indication that you probably already were aware of. Why? And why is this the case? It's because every time you go to fill up the pump, every time you take a moment and have to go get the groceries, or you go to buy basically anything, it's so much more expensive. So you see it before your very eyes. Did people see the balance sheets of the Federal Reserve increasing? You did. You're watching this channel, and I'm giving you a thumbs up. But those people, they probably didn't, let's be honest. So what they see is the effects of monetary inflation coming around with price inflation. Okay, look here. Bank of America clients hoard cash at the highest level in 2 decades. So you can see this for yourself and understand what's been happening. Of course, they're wondering what is going to be the result of all this. Okay, you can see it. We haven't had this basically for 20 years. Can you believe that? Okay, this is the average cash level, because there's a moment in time that we've experienced right now in which so much uncertainty has come through the markets, but it's being felt in the economy as well. Why? Because all of that easy monetary policy got right down to the floor. And now what do? Another crisis comes around, everybody. We're going to need to give us some breathing room. And that's what they're trying to do here. They're trying to get interest rates up as high as possible before the next recession so that they have that room to cut. Most people, they can't figure that out. I've seen a lot of individuals say they're never going to increase rates. But you got to understand what they're doing. They're forming a cushion before the next rate cut cycle. Thrifting is the new normal. Percentage who say that they have bought or are willing to buy secondhand products. And of course, I see this all the time. I hear about it all the time. You could look at this. It's all over YouTube, essentially. And then you look at the growing marketplaces, Craigslist, Facebook Marketplace, and so on. And you see what people are doing. Not because, for any other reason than they believe this is the right thing to do, and they're cutting back, and we look at all the stats surrounding that as well. Businesses are also feeling it. Look, not everybody is doing well today, and not everybody has done well. Canadian businesses, bankruptcies surge, and some fear this is just the beginning. The failures jumped 34% year over year. And guess why? Government aid was cut off. When the government stimulus runs out, they take that back. This is the effect. You don't have those people coming into the stores. You don't have the walk-through traffic. If that's the case, they're just going to claim bankruptcy. They're just going to end it. I thought it was interesting to really compare these two, and I will continue to do this over and over and over and over again. I have two videos that will be of interest to you. Number one, if you type into a search engine, the Money GPS 60 seconds, I break this down in full. If you type in another one, I believe the Money GPS 40 seconds, you will get basically the same thing in 20 less seconds. And essentially what I say is follow the money. Look at the balance sheets of the Federal Reserve and the other central banks, and look at the stock market. Okay? If you want to know what's going to happen, I've been talking about this left, right, and center. You know, if you only want to hear one thing from me ever again, this is it. Look at this chart. You know what's going to happen with the markets overall. Overall, it's not precise. It's not linear exactly, but this is the general direction. If you run a simple regression since June 2009, the starting point of the biggest monetary experiment ever, you will find that the G4 central bank balance sheets, the big four central banks, explain 90% of the MSCI All Country World Index level. So basically, if you print money, then this goes up. The actual global equities will rise. If you pull back, global equities will fall. Okay, simple matter of fact, stats are there. They show that. The next couple of months will be the most difficult of our lives. PM informs the nation. This is talking about Sri Lanka. Sri Lanka is in a world of hurt right now, and that directly connects in with this. Sri Lanka's impending default on $12 billion of overseas bonds is flashing a warning sign to investors in other developing nations. That surging inflation is set to take a painful toll. So we're seeing the extreme example with Sri Lanka, but understand that this will have an impact on the whole world. Okay, the food supply, the food chain, you look at it all over the place, is being affected. Okay, and I just worry about people and what's going to happen. Okay, all right, let me talk about what's been going up. If I can, I'll highlight as much of it as I possibly can here. OPEC Plus ministers say pumping oil won't ease gasoline prices. This, as well as wheat, which of course connects in with what I talked about a moment ago with Sri Lanka. Here we have, I find this funny, but the sanctions on Venezuela are going to be eased. Okay. And how is that all going to work? Maduro will have to commit to dialogue with Guaido, I believe is the pronunciation. But this is funny because the U.S. basically said previously, we recognize the interim president and, the current president, he's illegitimate and so on. That was understood. The whole world looked like they were going to go in and attack him a few years ago. That subsided. It didn't work out. Okay. At the same time, you have, I think it's 60 countries around the world that are going with this. Okay. That this is the interim president and so on. Then I talked about this not that long ago where the U.S. administration basically head into Venezuela and said, hey, let's talk, let's do business, let's do something. We didn't know exactly what was discussed, but that was understood, as well as Iran. Why? Because they were saying, okay, if Russian oil is not going to make it to the market, we need Iran and we need Venezuela. That was going on, and now it is actually a fact. Can you believe it? I mean, you say they're bad, you say this and that, but then you go ahead. It's just like the whole EU saying, okay, you know what? We're going to ban all Russian oil. And then like 3 days later come around and say, okay, if you want to buy Russian oil, just do it this way. It's a joke. It's a real bad joke. I mean, to lie to the people. Okay, really fast, what's going up? The dollar is going up. The dollar and the euro are on the verge of parity for the first time in 20 years, and it could happen within a month. So we see some extreme swings going on right now. Let's look at this. What else is up? Okay, you can see industrial production. Can you believe it? Manufacturing specifically here. And I believe I have the other one, industrial production here, up. That's surprising. And that's good. That's a good thing. There's more demand. We see that in some respects anyway. We'll see what happens as inflation goes up and interest rates go up corresponding to that. Another thing is that the stock market could, at least according to history, could go up. What happens after the first Fed rate hike? Well, here we have it over the next 3 months. It's a 50% chance it's positive. Over the next 6 months, 75%. And over the next 12, 100% of instances over the last 8 rate hikes, the market was up after 1 year. I would say that there are certainly different aspects to what we're seeing, compared to the previous 8, but I'm just showing you the history. Here we have it, put call premium right now. Okay, so basically what this is trying to show you is whenever the retail trader gets into puts, basically betting that the market's going to go down, the market turns the other direction. And that is basically at a peak right now. So the expectation here is that the market could reverse. Global growth optimism is at new record lows. So we see that going back to the 90s. Doesn't get this low, I'll tell you that. Stagflation expectations are the highest since August of 2008. This comes from the Fund Manager Survey, hundreds of billions of dollars under assets under management here for Bank of America, and that's what they say. And then as well as this, the cash being held, biggest tech short since August of 06. Quite significant. Tech not feeling the love right now, which means potentially if we have that sort of contrarian mindset, the tech could be boosted up here, at least for a little while until we see interest rates take a significant hold. Interest rate increases take a significant hold. And according to these fund managers, they see monetary risk as the biggest potential risk to financial market stability. Nobody should be surprised of that at all. We see it time and time again. We know the most important factor, the Federal Reserve, their balance sheet, central bank balance sheets overall, and of course, what they do with it all. All right, if you appreciate this information, hit that thumbs up button. It's right down below. And hold on, hey, hold on. 282,000 subscribers here. Are you one of them? If not, I gotta ask. I gotta know. Why? Why was that? Is the button broken? Let me hit that for you. Let me push that for you. All right. Hit that subscribe button. I'll see you on the next one. Take care.